Hello traders, Greg here with Market Update. Okay, so yesterday we did have an RBA meeting here in Australia. Yes, the RBA did cut rates by 25 basis points from 3.85% down to 3.6% as expected. So there were no surprises at this meeting. Look, the market, the Aussie dollar, drifted off a little bit sub 65 cents, but the buyer stepped in. No big moves there. But equity markets, they love rate cuts, and even though this rate cut was priced in, equity markets, the ASX, did spike up and made new record highs. Now we did hear from Michelle Bullock in the press conference after the decision, and what we did learn from her is that look, the RBA is very much data dependent. So any sort of further rate cuts is going to need data to warrant that, and if that comes, then yes, they'll be open for more rate cuts. And yes, we do have some very important data coming up, and it comes up tomorrow, Thursday. We have the monthly employment number here locally. Now last month that was actually weak, and we saw the unemployment rate jump up to 4.3%, which was a 4-year high. And it was one of the reasons why the RBA was able to cut yesterday. So tomorrow what's expected is the unemployment rate to actually go back down from 4.3 to 4.2%, and a headline number of plus 25,000 jobs. Look, these employment numbers always are volatile, and it's hard to know exactly what to expect. But look, if we do get a very good, solid employment number, then potentially, any sort of like imminent rate cuts again from the RBA maybe start to priced out. But again, if we get a weaker number, then the market will certainly be looking at another rate cut from the RBA when it meets. And obviously, if you're trading Aussie ASX, it's going to be important. So yes, tomorrow is going to be important for local markets. Okay, last night, we did have some very key economic data out of the US, and that was the inflation numbers, CPI for July. Market was expecting there for the headline year on year to marginally go up from 2.7 to 2.8%. The core number year on year to go from 2.9 to 3%. On the headline, it came out flat, so it stayed at 2.7%. And as far as the core number, that actually did marginally go up to 3.1%. But all up, when the market looked at the number, they certainly were not worried about the number at all. And they actually viewed that as a friendly number, the fact that inflation only marginally went up. Going into this number, since the last obviously very weak payrolls number that we had, market has been pricing in a Fed rate cut in September. So that number being friendly, that did not change that view for the market. So market certainly still expects that 25 basis point cut in September. Straight after the decision, we did have Trump come on the wires and basically attack Powell again, saying that he was useless, and that he was hindering the US economy and doing a bad job. And we also saw the Treasury Secretary Scott Bessent come out and say that the Fed should be looking at cutting by 50 basis points in September. So a lot of political pressure still on the Fed, to cut rates, something that we've never really seen before. And also, look, a lot of the Wall Street shops have been coming out, upgrading their rate calls. UBS, for example, have come out with a client note saying that they expect 100 basis points of Fed cuts, starting in September to the end of the year and into early 2026. So look, market is certainly getting very excited, very confident now that the Fed finally will start easing again. Okay, so how did the market react to all of this? Equity markets obviously loved it. Equity markets, again, they love any talk of rate cuts. So S&P and Nasdaq did what they do almost on a daily basis and went up and made new fresh record highs. So look, we are in a raging bull market here at the moment. Very hard to know exactly when this ends. It's going to need something super special to turn this around. So selling equities is something that certainly would advise against. Picking tops is not working. And look, S&P at the moment is, it's only about 50 points away from 6,500. So no doubt, I imagine there's a lot of Wall Street shops and analysts are going to be coming out and upgrading their forecast for end of year for S&P. So anyway, besides equities, in the rates market, we did see a little bit of volatility in the bonds, in bond yields on just after post the decision, but they did settle down, and we did see US 2-year yields like marginally lower, a few basis points lower, and also 10-year yields pretty much flat. Look, they did have some monster moves last week after the weak payrolls number, and they've already pricing in those Fed rate cuts coming in September. But in any case, the currency market certainly does follow bond yields quite closely, but the currency market did go dollar bid in. They were a little bit scared maybe that the inflation number might come out above expectations, so that was reversed, and the market was selling US dollars across the board. Some of the bigger moves, dollar yen. So dollar yen fell pretty much 100 points. I'd imagine in the currency space, if you're looking to sell dollars, maybe that's the currency pair to target. Certainly, it's got the highest beta to any changes in US yields. And the Aussie dollar that did dip below 65 cents. Did close back above 65 up towards 65.30. So it is back bid. Aussie dollar is a risk currency. It loves it when risk is charging higher. So I would not be selling Aussie, and certainly Aussie is yes, potentially could go back up towards and target 66 plus, which has been a big technical resistance for it. As far as the commodities are concerned, I mean, gold was it's been trading lower since Monday open from that 3,400 level. It was in sort of a free fall before the CPI number down towards 33.30, but post the number that did stop the selling, and we see the buyers come back in, and gold closing and reopening here in Asia around that 33.50 area, and silver also just below $38. So if I was to buy the two, I think maybe silver might be better value, just the simple fact that we still the silver traders are targeting that $40 target, and also risk being bid. So maybe a cheeky long around here, just sub $38. Other than that, look, there is certainly not much on the radar today, Wednesday, globally, as far as any sort of key economic data releases or any sort of event risk. So imagine, look, the market is probably going to continue just trading from its overnight leads, which is obviously very much risk bid. So anyway, good luck with your trades, and we'll catch back in with you shortly.